So I also want to do a video on different markets and a little bit of the tape reading exercises. So this is the YM Dow futures, and the lower time frame is also the YM Dow futures. It's the lower time frame and the higher time frame together. Alright, so basically what do you see on the higher time frame is the market was pulling back, and right here, right, pulling back, and then bang, that was the impulse, the high volume reversal that initiated the up wave. After the up wave, you had a high volume reversal that had no follow through, and instead you had a higher high. What does that mean? That means there's no supply, and if there was any supply on heavy volume, it was absorbed. Alright? You see that? 42. Supply attempted to go lower, and it failed. What that means is, anytime I see failure, it's actually the concept of effort reward. It's also the concept of failure. It's also the concept of a lot of things. But, something happened to this volume, this heavy volume that came. Right? A heavy volume, 42 volume. And I think this is in thousands or 10,000s. But this 42 volume came down, and the market reversed. What does that mean? Well, it means that there was an exchange of volume, there was an exchange of contracts, there was an exchange of property, it was an exchange of risk, however you want to see it. That exchange occurred, and it went from sellers to buyers who were very eager to buy and took price to a higher level immediately. There's no follow through, nothing. It took it up. So that's why you have the buy signal here, and when the market went back down here, obviously this area was a high interest area, and when the market pulled back to it, right there, into this buy signal, what do you think happened? People saw that this was aggressive buying here, and they just came in and jumped on board and did this. Now, you may be asking, what about this? 80 volume. 80 is the biggest volume. So, sometimes it's very difficult to read what this is, because obviously they're selling off the highs, right? They're selling off the highs, and the thing is, they're selling off the highs, but they're coming back down to an area of aggressive buying. So buyers will step in, and they did step in. So someone sold a huge load off the highs, but buyers were still at support, and they said, okay, you can sell whatever you want to sell, we'll buy it. And they just bought it. So someone did, extremely heavy volume. Maybe they were selling from their profits or whatever, but buyers came in at this area of support, this wave, and they bought and took it up. Alright, and now you have this high volume here, 47. I don't know what's going to happen after, but that is significantly high volume. It's the highest volume in the wave, and you really have to see how the market reacts. But I can assure you that this area in the back, there's 1, 2, 3, 4, 5, 6 block wave. They're there. This market is not to be trifled with. They're very strong interests that are holding up this market. And I don't know how it's going to end, but I really don't care, because I mean, this is something that might have a blow off top or something like that. It may go parabolic, but we don't really care about that. Just look for the opportunities as they present themselves in the now moment. Over here on the lower time frame, take a look at the lower time frame. What you see is you have a heavy buying, you have a pullback, and it's initiated with heavy volume. I love it. Love it, love it, love it. What does that mean? This volume here, 30, you know what I mean? 30, and then 23, and then it proves itself with the wave. It means that they were buying on the pullback. It doesn't mean, you know, sellers were obviously selling off the highs in the second brick, right? But guess what? There was someone else who was buying. So they were buying at this level. It dipped below and they bought it, you know, and then price went up. All right, now I'm gonna explain what this high volume is here also. This high volume here, where it says 24, is the breakout volume. Okay. When price took out this high volume here is breakout volume. It is the volume, basically price volume breakout. Okay, you're gonna see that a lot. There's actually spots that if you're, you know, accustomed to reading volume, you'll know where volume is supposed to come in. And you know, there's a reason why this area is expected to have high volume. There's a reason why a breakout is expected to have volume. There's a reason why, you know, high volume reversals, breakout volume, supply and demand zones, etc., you know, they have high volume, and this is really not visible in, well, I'm not going to get into that. Okay, anyway, so this price goes up, and there's a reason why this volume is important too. These are three different spots where you have high volume, and guess what? They have different interpretations. Alright, volume on the high bar is a climax. Alright, this is a climax. Volume on the high bar here is a climax. Volume, because now, you know, I actually, based on my understanding of Wyckoff and all that, I actually created a schematic for this because I'm not going to get into that either. Fuck it. And over here, this is breakout volume. Alright. And over here, I call it like, I don't know what to call it, like reversal volume, I think I call it. Alright. These are, this is all volume, but what does it mean? When after a pullback, when you have this volume, it means buyers stepped in and they're ready to take it higher. Why? Because they believe that this is a good price. That's all. It's a good price for whatever reason they believe it's a good price. Then you have breakout volume, which is also high volume. Why is that? What is the meaning? The meaning is they've gone over a resistance area, and on the resistance area that you have sell orders. You know, people trade support, resistance, etc. So they put a lot of sell orders over there. So volume takes out those sell orders, and that's why it has high volume. Okay. And then at the highest bar, when it has a reversal on top of a multi-bar wave, you know, on the highest bar, this is a climax. And the climax basically means that, you know, there's a psychological reason for it, and I'm just going to quickly explain that. But what happens is people who have not gotten in, and it's amazing how this works in markets, to the point where it becomes a, I don't like to use the word pattern, but you know, what happens is when people see this, they don't know whether to buy or not. They're like, okay, I'm holding, I don't know, oh shit, oh, buy. And there is a natural tendency for 100 years for people to buy tops and sell bottoms. You want to see it again? I'll show it to you again. Who do you think is buying up here? That huge volume over here, 38, you know, right here, 17 and 38. Who's buying off there? You think smart money is going to buy up there? Or are they going to buy at the reversal, right after the pullback? No. The high volume up there is climax, and the motive behind this behavior is that is actually retail traders. Retail traders, and this is actually why markets are very psychological, because what happens? You see the price go up, you didn't get in. You see the price go up, you didn't get in. You see the price go up, you didn't get in. See the price go up, you still didn't get in. You see the price go up, you still didn't get in. And over here, what happens? The fear of missing the move gets so strong, it keeps building. It's like over here when you didn't get in, the fear of missing the move, let's say if we quantify it, it's at a 5. Over here, it's like at a 6. Over here, it's like at a 7. Over here, it's at like an 8. Over here, it's like at a 9. And finally, it goes to a threshold where you don't have control. Where you don't have control. You might think you have control, but you don't. And you will be forced to buy. That's how powerful fear of missing the move is. So over here, these traders, why this is psychological is because they can't help it. They will have to buy. Okay, the fear itself is such a strong impulse. It will force people to buy at the tops and sell at the bottoms. You know, and later on they're like, why did I do this? Why did I do that? But this is the issue with markets. It can, you know, basically you have no control, especially over these impulses when they come to extremes. Anyway, so this is climactic. Up here, these are retail traders buying. Alright? Smart money bought this reversal volume here. Sometimes, I don't know who does this breakout. I really don't know who does it. I really don't know who the fuck does it, but the breakout occurs, and you know, I can tell you this. In my opinion, the reversal, which is at the low of the wave, is bought by smart money, and the climax, which is at the high of the wave, is the total opposite. Is bought by not smart money or, you know, retail traders. In the middle, where you have the breakout, I don't have a clue. But that's how markets are. This is what usually happens, and how to interpret volume in different spots. All right. Give you another example. You know, I mean, you see this all the time. You know, you really see this all the time. It happens. I've seen this phenomenon occur routinely. Yeah. And they're very lucky that, you know, the markets didn't reverse on them. Otherwise, they'd be caught at the highs. But anyway, and let's quickly take a look at the bonds. The bonds. Alright. So bonds are in a very, you know, bad position. Let's take a look at the what the hell did I do? Alright. So right here you have high volume, and basically this is at the top of a wave in a downtrend, which is basically smart money. What they're trying to do is get the best prices to sell. So this right here, as price was going up, they found the spot they want to sell, and saw 147. I think it's 10,000 or 100,000. I don't remember, but 147 is the print, and then price goes down. Over here, as price goes higher, there's more selling, and there's a clean break. Now they get a nice retest of this area, and again you see the high volume reversal, which is right there. These are pullback traders that are buying on the pullback. Bang, and double bang, and it goes down. Now it's retesting, and you have a low volume. I don't know if I can use this because this low volume is at nighttime. It's like a little difficult to interpret because nighttime it acts so crazy. I don't know. But this I know that they were selling. They came in, and people who can wait. And this is another thing I want to explain to you. If you understand what I'm saying, smart money or smart traders, the difference between professionals and retail, it really is not. It's much more than just this system or that system, a bullshit system. It has to do with their ability to deal with fear. And I can prove this. I don't know if other traders or whatever, they can prove this or not, but I will show you clearly the proof for this over and over again. When you see the market do this, right? When there's a reversal here, it'll have high volume. Okay? And basically have high volume. To get in over here, you are looking at the risk and you are waiting patiently for the market to come down to you. Okay? Then, when it starts going up, you have high volume at the top. Okay? Now, high volume here is caused by patient traders. High volume up here is caused by impulsive traders. Okay? High volume up there is caused by traders, or I guess it could be systems as well, but basically I believe it's FOMO that's driving this, fear of missing the move. This example, you see clearly how one group of traders is able to be patient, risk averse, and waiting for markets to come to them, while example above is waiting for is basically forced into the market out of fear. Okay, now you want to see examples. Well, I've already showed examples, but this is extremely important. This buying over here, selling here, right? Selling this with a stop above this is a low risk being patient trade. Okay? Buying up here is an impulse trade. Okay? Market, you're buying on the patience versus impulse. And you see this behavior in the market. So this is clear evidence showing you that there are different groups of traders that are in the market, and one has the ability to wait and be patient and trade on their terms, while there is another group, I don't know if it's systems or whatever, it may be momentum traders too, so I'm not really sure if it's just FOMO, but momentum traders also, market will hit certain numbers that clearly identify high momentum, and the idea there is buy high and sell higher. So that could be another group. But whichever group whichever group, don't get in at the highs. I think there's a big emotional difference between those who get in the highs and those who can wait for low risk pullbacks. And others, you can see that they're buying breakouts very clearly. For example, this is a very clear example right here. See that? It was a breakout of this level. That's it. So that thing was nothing more than a breakout over here. So you have the ability to buy the pullback, or buy the breakout or retest the breakout. There's nothing wrong with that. And look at the move. So the real takeaway is impulse control is extremely important. If you think this game is about systems, there's just it's not. If that was the case, all you would need to do is just get your hands on a system. And the other thing is, I don't know. Anyway, take care.